Hello and thanks for registering. So let's get into the detail now about this demographic trend that I think can very much become our investment friend. So as I briefly mentioned on the other video, I want to talk in some detail about the way our population is aging. I want to go through this new approach to caring for that aging population and the unique circumstances that have led into this becoming an investment opportunity for us, one that I've personally have already decided to go ahead with. As you probably are aware, there are more than 12 million people in the UK now who are over 60. There's 750,000 who are between 85 and 89, and 376,000 aged 90 or over. And no surprise, that trend is only going to increase. There are more and more of us living longer and longer. And while that's very nice in certain respects, it also has obviously a massive impact in terms of the facilities and the resources and the skills to care for that aging population. So 7 in every 1,000 people aged between 65 and 74 live in some kind of communal nursing or residential care establishment. But that increases hugely as they get towards 90 and over to pretty much 25%. So 250 out of every 1,000 aged 90 or over need to be in some kind of care facility. And therefore, not surprisingly, demand for care homes is going to increase hugely. It's forecast to increase by 60% in the next decade and by 150% over the next 3 decades. And I actually think these are relatively conservative numbers because what we're seeing is an exponential increase in the number of people living longer. We're adding hugely to our life expectancy each year. So these figures, I think, are conservative, but let's base our assumptions on those. And I want to talk about these fundamental changes in care. I don't know if you ever looked at care homes back in the 70s or 80s. This is a sort of typical image of one. And they were really a practical alternative to people who actually were a bit fed up with all the aggravation of running their own home. And they perhaps wanted a bit of company. Maybe they'd been widowed and they just wanted to go and have somewhere they could sit and have a chat and a coffee with some friends and then have the privacy of their own room to go back to. And that was really almost a lifestyle choice that people were making at that time. Today, it's very, very different. As I know from my own mother-in-law, who's 95, social services will go to the ends of the earth to keep people in their own home, unless and until they become totally dependent. And usually that's to do with something like dementia. If they need some kind of physical or mental care, that means that they've got to have round-the-clock attention. But they will send in carers morning, noon and night to keep you in your own place. So what that means is the facilities that are now being built have to be to a much higher care standard than was acceptable 10, 20 years ago. So they have specific things called dementia care standards, and also the EU, needless to say, gets involved in this, and they've just recently raised the standard again by increasing the size of room that must be provided for every resident of one of these facilities. And the reality is many of the existing facilities are already being rendered obsolete by these new rules. So what we have to do now is make sure we're investing in something that's built to the latest standards that can exploit them over the coming decade. And really, this is not just an investment discussion. This is a more a discussion about how would you want your family, your loved ones to be cared for. We hear all sorts of horror stories about some of the older care homes that are out there. It's one of the reasons why a lot of people think they don't want to go and live in these places. But if your parents or somebody very close to you gets to a point where they simply can't look after themselves, wouldn't you want to know that facilities like this are available for them? And here's a way you can actually enable that while at the same time making a very sound investment. And I think it's really one of the powerful aspects of this particular opportunity is that you are providing a much needed high standard of care, to the highest standards that the EU regulations demand, whilst at the same time investing cash to make some sort of return. Now the reality is the banks are still saying no, to even projects like this. It's very hard for developers to get funding. They're therefore being forced to go out to private investors, and obviously to make that work, because it's an unusual investment that people have not been in the habit of making, they have to make the offer attractive. A large part of what I have to do when I'm telling people about things like this is to educate them about these new opportunities that simply weren't around a few years ago. So here we are now at a time when things like, I suppose, student accommodation has become a huge market. 5 years ago, nobody was talking about student accommodation as an investment opportunity. Now, if anything, I think the market is almost flooded with student developments, some of which seem to be miles away from any university. So with something like this, I think we're getting in on the ground floor of what will be a massive investment trend over the next 5 to 10 years, simply because there are nothing like enough of these homes out there. The banks aren't lending to the developers that want to build them, and therefore they're having to come out to people like you and I to raise that initial funding. And independent of this project, I'm talking to other people within the Wealth Watch community who are involved in the care home industry, and they're telling me there's an awful lot of activity going on. There are American companies that are looking at bringing their models into the UK as well. There's a lot of interest in and focus on this kind of sector, and we're getting in at just the right time. So let's talk about the specifics of this project. It's a 50-room dementia standard care home. We will be investing in a single suite, a single ensuite room with a 125-year lease, and very importantly with individual legal title. So, whatever happens to any other entity involved in this process, you are the legal owner of that piece of property with a very long-term lease on it. The developer who's building this has 30 years experience, including other similar care homes, and the operator has almost the same amount of experience, headed up by quite a well-known personality who's actually been in this business for nearly 3 decades, and they are very much the ones that will operate it on a day-to-day basis, and effectively the ones who will be guaranteeing our long-term income. Now, each of these suites has been independently valued by BNP Paribas at £90,000, but we can get in at just under £65,000 for an outright investment, or we can put in a 25k deposit and take the rest as an interest-free loan from the developer. Because obviously, the reality is the developer's got some margins in this, and they can afford to take that amount of cash in, and with the right mix of outright buyers and developer finance buyers, there'll be enough to build the facility and pay the rental income that we're going to look at in a moment. BNP Paribas also looked at the whole of the local market around where this facility is being built, and they found that there was 6.75% of the population already over 75. About a third of them are over 85, so there's more than 3,000 people. That's expected to increase by a further 17% in the next 5 years. So at the moment, within a 5-mile radius of this facility, there is only 1 bed available for every 4.6 people over the age of 85. So this is the sort of number I really like to see. So there's a desperate shortage of this kind of accommodation in the very geographic area where this place is being built. And when the odds are stacked in our favour like that, it makes you feel that we're a long, long way from any kind of potential oversupply issue. So typical room, here's a shot of the bed, a flat screen TV, furnishings and so on. There's an aerial shot. You can see the ensuite facilities. So it's these are the right standard individual rooms. There's no room sharing here. It's 1 person per room to the latest EU standards on size, equipment and facilities. That's a shot of what the whole building will look like with the gardens around it. There's another view with the parking facilities for visitors and staff. Latest design, obviously everything's done to the latest specifications. Okay, so what are the financial returns? Well, we're going to get 10% per annum for 10 years. That's on the amount you put in. So if you put in the full 64,995, you'll be getting nearly 6,500 a year. If you're putting in the 25,000, then you'll be getting payback on that, as well as the paying back on the loan. At the end of the 10 years, you get a guaranteed buyback at 80,618. That's 125% of what you've paid. Or you can continue to keep the room, and rather than getting the set 10%, you would keep 50% of the net revenue of what will obviously by then be a very well established facility. The current numbers I've seen suggest that if you were to go for that option, you'd probably find yourself getting something like 12 or 13% as the actual return. Obviously the guarantee is set some way below that because there has to be a safety margin for the care home operator. So once you actually go into that shared risk basis, you probably can expect an uplift of another 2 or 3%. Or, of course, the other option is you can sell the unit on the open market. You've actually got some options of selling in the first few years as well. I haven't covered all the minutiae of the details here, but generally, you should go into this looking at it as a 10-year investment, during which time you're going to get a very chunky 10% return. You're also going to be able to get your money back, so you've got a guaranteed exit strategy, which is always nice when you go into these things. But between you and I, the developer is not expecting that many people to want to take that option, simply because by then he thinks the units will be worth a lot more than that, and also he thinks people will want to carry on getting that level of income from them, because they obviously will have already paid for themselves anyway. So you'll effectively have got all your money back, and then you'll be getting some income for the rest of your life if that's what you want. So looking at that in a bit more detail, if you take the outright purchase model, you would pay 64,495 up front, and then you'd get the 6,400 income for each of those 10 years. If you then took the buyback option as well, the total return is 145 less what you paid, so your net return is 80,500, which annualizes by my sums to 12.5% return. And come on, you can't get the 2.5 in any kind of bank account at the moment. So to get a 12.5% net return over the next 10 years is pretty sensational. Looking at the other model, this is the developer finance model. What you're getting in the first 3 years is 10% of your deposit, the 25,000, and then in year 4 the full amount kicks in. So that means even after making your finance repayments, you're still coming out with some net rental income as well. So on this model, you'd be putting in 25,000, you'd be borrowing 39,000. And then you look at the total returns, less your deposit, you're getting 68,769. So it's a lower absolute return than the full purchase model. But interestingly, if you look at the annualized return on investment, because you've only put less than half in at 25,000, you've actually got effectively double the rate of return there, 27.5% annualized ROI. Which I think is pretty amazing. So you tell me where else you think you can own some bricks and mortar in a sector like this that's in massive demand, massive undersupply in the market at the moment, and get 27.5% return on investment. I think you'd agree that's pretty stunning. So the question to ask is, which model works best for you? Are you looking for income now? Do you have 65k available? In that case, the outright investment model might work best for you. Certainly, if you imagine this compared to an annuity. I mean, annuities are paying about 2.5% at the moment. This gives you the chance to get 4 times that. And, fundamental change here, you're keeping your capital. You'll get your money back at the end of the 10 years. If you buy an annuity, that money is gone forever. So this way, you own an asset, you take 10% income from it, and then you can sell the asset for more than you paid for it at the end of 10 years. Who would ever want an annuity when you've got something like this available? But if you're looking more for capital growth and you're quite happy to wait for 10 years to realize that, and you've got, say, 25k available now, then the developer finance option may well work best for you. So that way you put a lot less in up front, You pay off at zero interest the amount you owe, and you get the full benefit of all the capital growth. So this is a great leverage model, and I know a lot of people in the Wealth Watch community are looking to maximize their leverage. You can't do any better than getting a sort of 2/3 developer finance at zero interest, while you're also getting high rental income. So again, you can either realize that gain at the end of the period, or sit back and just let the income keep rolling in, and the ROI will become exponential on that initial 25k investment. So that's the one that perhaps will work or appeal to a lot of people in the Wealth Watch community. The process itself is very quick and painless. I think of all the investments I've made, this is probably one of the easiest. You just put a 500 quid reservation deposit down. I can help you choose a unit. I mean, there's not an awful lot in it, to be honest. It's we're not looking at something we're going to occupy hopefully here, so it is just purely an investment. There's a memo of sale and contract pack sent out to you. You sign those, return them with some ID, and pay over the rest of your deposit. The whole exchange takes about 72 hours, and then the returns are paid yearly in arrears once we get the thing going. So construction they've already cleared the site, they've put the fencing up in the last few weeks. Construction starts in, I think, October, November time. That will take 12 months, although that doesn't actually impact your returns, as I'll show in a minute. But this is all steaming ahead now, and this is a great time to get on board. So just to remind you, we're buying these suites at 35% discount to the BNP Paribas valuation. We're getting 10% for 10 years. If you go in on the developer funding option, you're getting nearly 40 grand at 0% interest during that period, and obviously the capital gains on the whole property. And then if you want it, there's 125% buyback at the end of that period. So let's go through some of the most frequently asked questions I'm sure you'll have. What are the yield projections based on? Well, these are calculated on local government funding at current levels and also private tenant income in the care home. This has been evaluated by the operator, this company with 27 years experience, and they have committed to that. Based on their own forecasts, they are effectively underwriting those yield projections. Are there any other fees that are charged against that 10%? The good news is, no, there are not. There's no maintenance fees, there's no management charges, there's none of these other little things that can impact your return that you find on some of these investments. The full 10% is paid into your account each year. And it's an annual payment in arrears. So you sign up today, you get your first payment in a year's time. What about if the developer goes bust? Well, there's an insurance bond that's been provided as part of that, so your funds are covered by an insurance bond if the developer goes bust. If the construction gets delayed, that doesn't matter. Your returns are guaranteed from day one. They'll happen a year later, regardless of whether the project delivers on time or not. Obviously, there's all sorts of penalties in the contract that make sure the developer will deliver on time, but to put your mind at ease, it does not impact the start of your returns if there's any delay. As mentioned, the rental yield is being initially actually underwritten by the developer, and then once the home is open and operational, it's underwritten by the care home operating company, who's looked at the numbers, and as I said, they've left a safety margin in there, so they're quite comfortable that on the predicted levels of occupancy, which will be 90-something%, be close to 100%. There's such a shortage of these facilities. They believe they can cover those numbers comfortably. Are there any legal fees? More good news, no, there's not. Sometimes you find 5 or even 10% of what you, on top of what you pay, has to go in legal fees. Not the case here. You just pay your 25k or your 64,995, and the unit is yours with no additional costs. What are the exit strategy options? Well, you've got a few options in the early years. As I say, you can get out in the first 3 years. You can also, when you get to year 10, you've got the guaranteed buyback, or you've got the open market option, or you can hang on to it and keep getting the rental income. So you've got at least 3 or 4 exit strategies from this investment. Bear in mind, what's happening here is we are replacing the bank in underwriting the funding, the cost of this project. The developer and the operator are quite comfortable they want to run this in the future, and so the developer wants the first option to buy back your unit once the thing's up and running, simply because from a cash flow point of view they can't do it yet, but they'll be very comfortable doing it in a few years' time. Can I invest in more than one unit? Yes, you can. I'm talking to one investor at the moment who may take 8 of the remaining units. So the only question here becomes availability. As I record this, we're about 50% sold out on the project, so it's really just a case of whoever gets in there first. I think there are about 25 units remaining, but I'm confident they're going to go very quickly because this is such a good deal. So it really is a question of if you've got that money available, I frankly challenge you to find a better use for it than the returns I've quoted you here, and it's just a case of whether you can get in whilst there's some remaining units. For those of you who are not familiar with the Wealth Invest team, one of the things we do is produce the Wealth Watch newsletter every month. That goes out at the moment to over 1,200 readers. It's meant to be informative and entertaining. You'll find there's virtually no selling in there. Most people tell me it's great, fun to read, and they look forward to it landing on the doormat each month. You can get your copy if you live in the UK by subscribing at wealthwatch.tv. There's a form you can fill in under the video there, and there's no charge for receiving Wealth Watch each month. There's also a weekly Wealth Watch TV program. If you just go to YouTube and search on Wealth Watch TV, there's a new episode every Thursday afternoon at 3 o'clock, and you can subscribe there as well. And we also do a weekly blog on a Tuesday morning if you go to blog.wealthwatch.tv. Okay, so that's a bit about us. We're based in Belgravia. We deal in extraordinary investments. If you're wondering how we do all this, we do all the research, we do all the due diligence. If we like the thing, we invest in virtually every project ourselves. As I said, I've already invested in this one myself. Then we make them available to other people in the Wealth Watch community. We get paid a small commission by the developer. That means we can keep our body and soul together and also provide all of this stuff to you free of charge. We don't give investment advice. We're not registered with the FCA. We're simply sharing information with you so that you can make your own decisions. That's what this is all about, your financial education, your freedom to decide whether this is right for you or not. Hopefully you'll think it is. I'm currently rejecting about 70 to 80% of the projects that people are putting in front of me. This is one that got through. This is one that ticked all the boxes. I hope you agree it's an exceptional opportunity, and if you want to take it further, just have a look at the facts and figures to see if it makes sense for you. Decide whether you prefer the outright purchase option or the developer finance option, and then get in touch. You can email me on graham@wealthinvest.co.uk, or you can call my team on 020-7760-7681. They'll tell you about the latest availability and obviously answer any questions you've got and help you make a reservation. So thanks for listening. Hope you found this useful. Look forward to helping you take it further if it's of interest to you.